Thanks very much for joining us. Welcome back. We've got a really interesting discussion here, which is focused on human capital, ESG, and winning cities. Obviously, that's been brought to the fore in terms of human capital and wellness, especially. And so that was an area that we particularly wanted to pick up. Super panel here. We've got Christiane Conrads from PwC Legal, Lars Schnidrig from CORESTATE Capital Group, and Uwe Rempis from LaSalle Investment Management. Let's just start with kind of brief introductions. Lars, for those who don't know, just a brief introduction of yourself and CORESTATE Capital.
Thank you, Richard. Good to see you again. Lars Schnidrig, I'm the CEO of CORESTATE Capital. We are in real estate asset management business, managing 28 billion assets under management and two main focuses. We have a large real estate debt fund with which we are financing German residential developments. And the other thing is obviously that we are engaged in real estate equity products concentrated on mega trends, which are backed up usually by residential, micro-living, core office, and logistics all over Europe.
Super, thanks very much. Christiana.
Yeah, thank you very much, Richard. Hello, everybody. Good morning. My name is Christiane Conrads. I'm a German qualified real estate lawyer at PwC Legal. I run a team at PwC in Cologne and at PwC in London. And in addition to focusing on my real estate legal work, the real estate transactions, I've been focusing on ESG criteria since 2012. And in the last couple of months, let's say 6 months, we have been heavily involved in advising our clients on implementing an ESG strategy. So I'm very much looking forward to today's discussion. Thank you.
Super, thanks very much. Uwe.
Yes, good morning, everybody. I'm Uwe Rempis from LaSalle Investment Management. I'm based in Munich and I'm the managing director of our KVG business here in Germany. Likewise, I'm also head of fund management. And you're possibly certainly aware of LaSalle as an investment firm. We belong to JLL, so our global mother with 90,000 employees across the globe. LaSalle manages presently 66 billion assets under management around the globe in 22 offices and 15 countries with 900 employees. In Europe, although the number is a bit smaller, 21 billion invested in 11 countries with 350 people in 6 offices.
Great, thank you. Lars, maybe let's start with you. How do you see, I suppose, some of the changes brought about by the health crisis, I guess broadly across the market, but also in some of those key sectors for CORESTATE?
Sure. So for us, I think we have to differentiate. We have two main markets, as I said in the beginning. That's the real estate debt market and that's the real estate equity market. So on the real estate debt market, it's quite promising currently for us. As I said, we are financing predominantly their German residential developments. So we go in a very early stage and concentrated on top locations, in particular throughout Germany. And it reminds me a bit after the financial crisis 2008, 2009, where the mortgage banks simply reduced their lending capacities, or they had to reduce because the risk-weighted assets, they take less risk. And when you take less risk, you rather go out of development financing. So currently our fund there has a record high volume, although obviously we are in a worldwide crisis, but absolutely logical because if the mortgage banks provide less financing, and we all know that we need more homes in Germany, so the construction still continues and somebody has to finance it. So our position there actually is stronger. We could even do more. So we have quite a considerable pipeline, which I've never seen before since I joined CORESTATE 3 years ago, of some 100 millions from developers who are seeking for money to get their developments financed. So that's quite good. On the other side, on the real estate equity side, we see a clear distinction, and that's also, for me, copy-paste from the financial crisis. Investors, if it's a bank or an investor, simply wants more safety harbor, so to say. So it's difficult for them to underwrite risk where they don't know where the values are tomorrow. And therefore, a logical reaction to that is you go down the risk ladder. So away from opportunistic or value add, rather to core and core plus. We just actually published today a large 300 million core transaction, which we have just signed. So that shows you can do transactions, but more in the core segment. And this is actually where we are currently heading to. If it's residential, if it's office, it doesn't matter. If you have an office with a nice 20 years lease covenant in, so a considerable low tenant risk in terms of quality, you can place this. We have done this even in the hard time of the crisis via our subsidiary Hannover Leasing. But if it goes more up the risk ladder, then investors are more shy. I think they will come back once the market is acknowledging that this is kind of the new normal, because no pension fund obviously can live from 2 or 3% yield. So you need to mix it up. You do a bit core plus, but then you subsidize your yield in your portfolio as an investor by value add opportunistic.
Good. I just wanted to just pick up on some of the aspects around human capital with you, Uwe. Just in terms of the human capital, but also picking up the ESG side, how is that as part of the overall investment strategy? And I guess, have you seen a change, an acceleration or anything like that in terms of the sort of health crisis that we've seen?
Thank you, Richard. I mean, on human capital, we have embedded that in our investment strategy, specifically for the fund, for the REGI fund, which follows our index, European Regional Economic and Growth Index, which some of you may know, it's been published since 2000. Within that index, we are trying to identify the growth regions across Europe. So we're covering really a wide population of 750 million. And at the end, come out with a ranking of the top cities where, no surprise, London, Paris, these are always ranked the highest or the top performing cities because they have a lot of growth. Now, to answer your question on the human capital side, we've integrated 4 years ago the LaSalle European Human Capital Index. And this is really a very important part besides other components. So in the index, we measure growth in these regions, GDP, service employment, as I said, human capital, but also the wealth and business environment, always looking back and looking ahead of us. And the human capital index now is really trying to measure the level of education in these cities, in these areas, the quality of the education, but also patent production and the agglomeration effects, like how dense are the cities, and at the end looks into research and development investments and how that combines with tech venture capital. So that's one part of the strategy, and that is clearly a very important point. So within the index, there is also the human capital side and the ESG. I mean, that's also a topic which runs in parallel with policies being in place, so the entire underwriting following our policies, our strategies, and both go together. So it's a big theme right now.
I just wanted to check with you, Christiana, just in terms of, I suppose, looking at the role of ESG more widely in the market. How do you see that at the moment? Do you see that there's been an acceleration? And I suppose, what's driving that? Is it also partly, I mean, there's obviously a drive from the investment capital, there's a drive from the occupiers, and a drive, I guess, from tenants, especially with the focus on wellness. But is that drive also coming from a regulatory standpoint? What's your sense of the mix there?
Yeah, thank you, Richard. As you just said, it's a mix between all the different drivers. The stakeholder demand definitely has really increased over the last 6 months. But what we also see is really a change in legislation, and particularly on a European level, but also on a German level, we see huge developments from a regulatory perspective. So, for example, in July, the EU taxonomy has entered into force, which is basically a classification system for determining when an economic activity can be regarded as sustainably. And it defines 6 environmental goals. The first 2 are climate change and climate change mitigation. Climate change mitigation, and the second one is adaptation to climate change. And for these 2 environmental goals, the reporting period starts in 2022, but for the period 2021. So what we see here right now is that almost, all regulated entities, but also other market players, even also developers, so on, are preparing to comply with these requirements, and to be able to have the right products ready. And what we also see is really also from the EU taxonomy, but also the European disclosure regulation, which will enter into force in March next year. There's a huge increase in transparency reporting requirements, which is really on the agenda on all the European investors to comply with these requirements. And on a German national level, we kind of see some new regulations coming into force regarding energy efficiency and the use of renewable energy sources.
Great, thanks. I just wanted to pick up with you, Lars. I mean, we've obviously heard there about some of the regulatory sides, but looking at, I guess, we're all in a slightly different new world at the moment. Looking at this idea of human capital, ESG, and also how that plays, I guess, into sustainable long-term investment and winning cities, that kind of opportunities side. I suppose looking at the challenges that this creates for you as an investor and an asset manager. I guess how do you deal with that? Has that led to a kind of rethink of some of your policies, and also maybe an acceleration of some of those?
Well, first of all, I think the ESG, we have invested and started the whole issue actually 2 years ago. We've just published our quite comprehensive ESG report, where we show on a very quantitative basis which targets we have achieved, not only on the environmental side. Environmental side is quite heavy because you need to invest first in your technology, that you are able, for instance, to measure for your clients how much CO2, how much waste production in the assets is going on that we are managing for them or where we are co-invested. So that's a tick in the box. So ESG continues. I think ESG, as I always say, is something where we will have the full impact quite heavily in the next maybe 1-2 years. So I can only recommend to do that. I give you one example. Many of our clients are asking now, so to say, for a ESG report on their portfolio, like REST reporting. And if you don't have the people, the system, the IT systems, I think it's hard to comply with this. Now it's nice to have from these clients, but I expect exactly what Christiana just said. The Green Deal, this is all coming now like an avalanche. And therefore, size, I think, is important of an asset management. If you're too small, I can't imagine I spend so much time into that issue that smaller can invest the time and the capital that is required. So this is one thing. The other thing is every crisis you need adjustments. So that means when you steer such a company as we are, I think it's very wise to listen what the clients want and not only to think what you want or what you think is the hit of tomorrow. We go here very clear in discussions with our clients where they think their investment focuses on the next 12 months. That has changed. As I'm saying, we were quite a heavy player in the value add and opportunistic, and we will continue though when the market is back. But currently, of course, all our resources beside our debt business is going to core and core plus, very simply speaking. So the other thing is, I think you need a bit a healthy capital base so that you can stay co-invested. We have some 100 millions of co-investments in our transactions with our clients. And if you are, what I see, the one or the other, if you are under financial pressure, you may need to realize this. So therefore, I can only recommend, if possible, as in 2008, go through the crisis, don't get nervous, don't get hectic, just do your homework. And I can assure you, when was it, in March or my word is playing a lot around to do your homework and do it rather quick. So, and then coming out of this crisis, you have unbelievable chances because every crisis has kind of a cleaning effect in the industry. So that means the asset managers with their clients who go through the crisis have rather larger chances. And of course, it's always a proof of evidence that the business model obviously works. So I think adaptation, I think also the whole thing about how we have also 800 employees, how do you manage your people? This is quite a challenge. Never forget, the real estate industry, in particular in Germany, is not like the pharma or the automotive industry, where you have 100 years of top management experienced people, right? We are coming from a wave of 15 years, the cycle went up. So now it crashed in reality in many products. And therefore, I think it's extremely important that you really take on your leadership efforts with your team and then guide the ship, obviously, through the crisis. However, in our particular case, just to finish off, we have done also some adjustments in our products. Obviously, we had a smaller part in service apartments. I think this is a bit a difficult thing. Then on the other side, debt is working like a charm. We will invest in debt, so in our debt fund, and student homes, coming back to this, everything that de-risks the curve works. And therefore, we spend a lot of, or we reallocate our resources towards what is currently placeable with the clients.
Great, thanks, Lars. Uwe, I just wanted to pick that point up, and also the point from Christiana earlier about the about some of the kind of drivers of this. How much of this is being actively driven by the capital, and I suppose how much of this is more around the industry, I suppose. I mean, do you see that as an industry, we need to respond to the kind of climate initiatives, that this is a responsibility for the industry?
I mean, on the capital side, I'd say it's a clear yes. I mean, no investor really can neglect this fact. And whenever we have RFPs on the table, I mean, the ESG topics are ranked very, very high, of course, amongst others like investment performance, track record, and coverage, etc. That's clear. But ESG, it's definitely the driver. I mean, for less institutional investors, it's not quite there, but it will come. A bit different this from our experience, the situation on the tenancy side. So same here with bigger occupiers, very institutional. They have their policies. It's very important for them. But smaller tenants, it seems to be less of relevance. So their location and service charges seem to be still more dominant. But at the end, it's really an educational piece also for us as investment manager, as asset manager, so that we, together with the property manager, really educate our tenants and help them to improve their sustainability operations on the premises, so that overall we can reach the targets. So that's really key here.
That's really interesting, Uwe. And Christiana, I just wanted to pick up with you, because Uwe there mentioned, I guess that point around how you actually put some of these things into practice. And in terms of that, how do you see that, obviously from a PwC perspective, in terms of, putting in place guidance for ESG strategy, just so that then people can monitor and really move this forward?
Yeah, as Uwe just said, so it's basically the institutional investors who really have to do something right now from a regulatory point of view. But we also see that more and more market participants, developers, also private equity firms are getting ready to be prepared to, because, for example, when you want to sell a property to an institutional investor who decided itself to be taxonomic compliant, you need to sell a property, a product which is suitable. So, and as you said, Richard, so for the last 6 months, so we see that more and more market participants really take the time to think about how they can develop an ESG strategy and how they can implement it. And I think Lars mentioned it before, it takes time. So, and I think now is the right time to look into that. And first, you need to get an overview on all the different topics. You have regulatory requirements, you have stakeholder requirements, and then you need to, but we also see that so many market players already have or comply with ESG standards, for example, with green building certification, or trying to monitor and manage consumptions during the holding period. So there are so many things which already really good from an ESG point of view, but you need to put it, to get an overview and to put it integrated into a strategy. And then you need to sit down and really develop your own strategy. You need to define what it actually means. What is an environmental KPI? What is a social KPI? What is the governance KPI? And then you need to look, okay, at what level do I need to implement it? Do I need it, for example, the environmental objectives KPIs, most of them need to be complied with on an asset level. But when you look at social and government requirements, of course, they apply to service providers, contractors, but it's more objectives which need to be implemented on a corporate level. So you need to sit down and think it through, and then get your people on board. It's really important not to tell the people, okay, you have to do it now. And I think most of the employees, I think, really understand why we're doing it and are asking for it. And so, but you need to take the time to explain that it just doesn't mean just more work or something, but it's part of an overall strategy with overall incentives, and get anybody on board.
Yeah, I think it's interesting. It's interesting to have watched the case for ESG develop since there was encouraging kind of science before the global financial crisis, and then after it took something of a backseat, I think it would be fair to say. And then you've seen that growing a great deal, and now it seems quite clear for most people, I think anyway, in the investment world and the asset management world, that this is here to stay, and this is something that the industry has really got to work on. I just want to just for the last kind of 10 minutes bring this round a little bit to the winning cities side of things. I mean, Lars, in terms of looking at this human capital, wellness, ESG, how does that drive your investment view in terms of looking at, I suppose, the sectors that you're looking in, but also particularly the locations? How does that impact on your investment view for these cities? Is that a key element for you?
Definitely. And I think the way how people live, how they work has changed. And now it's so interesting. I think we all saw in the 60s, 70s, the larger lonely ghettos where people live, nobody wants to live there. So where we are very engaged is the product, obviously, of city quarters, which we published also today. And I think it makes sense, right? You don't want to have these ghettos. We have them all over the place, also in Europe. The banlieues, you have them also in the US, etc. So therefore, combining living, so residential with commercial, that you have your school there, your kindergarten there, and that is actually what we are doing there, is executing the political will. Because building just more flats, so you have two options. You do it in the cities, impossible, because you don't have sufficient land plots to build in the top, say, 15 cities, 400,000 residential units. Or you do it in the outskirts. And if you do it in the outskirts on a lonely proposition, that it's only residential, people will have this loneliness effect. You don't have maybe the problem today, but then you have again the problem in 15 years. So, and the combination, which I think is reflected in city quarters, that's quite a very prospectus product where we are, and again, we are solving there also a problem which we have definitely in the major cities, because this you can also do a bit in the outskirts. So otherwise, we are strictly going after, and we are following there the investment wish of our clients. We are simply going after mega trends, so the urbanization, the demographic developments, that has not changed. That was rather pushed since the pandemic. And yeah, so as I'm saying, it's not maybe so fancy, but it's more about focusing and concentrating. But if you are in the area, as I'm saying, where you have clear demand-supply unbalances, there's a lot to do. I mean, again, we need 300,000-400,000 residential flats in Germany. I'm saying this even in my time when I was at Vonovia. So that has not changed. Why don't we fill this gap? And we are currently really putting more resources into that. And I see there quite heavy demand from our investors. And you can do it, but I think the focusing and also bringing the teams to these products the clients really want, that's a bit the task which we usually do in an adjustment in such a crisis.
No, I think that's interesting, and I think the changes that we're seeing. I mean, it's interesting there that again, some of the strategies haven't really changed, but in a way, this has informed it. Uwe, just coming to you. I mean, obviously the strategy is in part based around that idea of what is an attractive city, what is a winning city. So I guess within this context of human capital, also I think wellness, well-being, those kinds of things that are particularly coming to the fore. How do you see that? And from your criteria, what makes up a winning city or location?
Yeah, it's correct what you said, Richard. I mean, it's not just all about, say, the growth perspectives of a city. It's also about well-being. And what we're trying to analyze and to better understand right now along the ESG strategy is definitely, say, the long-term climate risks attached to these cities. So, I mean, on the one hand, we have our economic parameters based on the index, and then we have our ranking. We know where we want to go, but still, I mean, the long-term risk on the climate, we are not there yet, right? This is still to be analyzed and to be better understood. I mean, but for the time being, if I look at the, say, new results of the index, it's quite appealing. I mean, there you have already effects like, say, in these more lively cities like Zurich, Vienna, but also still Munich, and interesting Luxembourg for the first time being ranked number 3. Because of, I mean, there are no high-rise buildings. You don't have the density. You don't need to commute for hours. So it's a very lively city, which makes it then more attractive, and certainly one of the winning cities at present. But the long-term trend is certainly on the climate risk, and to have a full understanding what that means, what that brings to the cities, and take that also into into consideration.
Yeah, that's it's interesting that topic around sometimes some of those smaller locations beginning to now come to the fore. Certainly in the UK, there's been a lot of discussion around smaller cities now beginning to be more attractive from that point of view, because people feel that they don't need to spend hours going in and out of London or major conurbations. Just for you, Christiana, I mean, the practical part of this. Also, we're going to discuss a little bit later in a topic coming up around this afternoon with Rodevco as well, around how practically we achieve carbon zero, for example. But there's interesting things around this as well, I think, for investors around, how this works when you look at it across the whole life cycle of an asset or assets within a portfolio. And also other kind of complex things around data exchange and those kinds of things. How are people tackling those, Christiana?
Yeah, I think that's exactly the point where I think we've seen a huge development over the last year, I would say, when it comes to transparency and when it comes to really adopting a life cycle approach. Also, when this is also being kind of promoted by the EU taxonomy. So it's not just only about the level of consumption during the holding period, but it's also about how much emissions were emanated during the construction works and something. So this is really key, because we won't be able to tackle the climate change problem, which is imminent, if we only look at a certain period in a moment of time. We have to look at the overall life cycle of the property. When it comes to reusability, for example, it's also important to have the data available during the construction phase. So, and Richard, as you say, having a good database is key to really implement an ESG strategy with focus on risk management matters, but also to increase the quality of the real estate itself. So you need to start kind of collecting ESG related data already in the construction phase, and to hand it over together with the property when you sell it. So have a kind of reliable, like a land register. So you need so this is basically the objective where it's all heading right now. You need to collect the data, and any stakeholder needs to contribute to that database, and then it needs to be transferred from one owner to the next one. And of course, any service company also needs to contribute to that. So, for example, what you see in Germany right now is, I think it's true all over the world. So when you instruct a new property manager, they usually start to collecting the data for themselves. They're not using the data which has already been put together by the previous company. So which is just ridiculous. So this is, I think, really what's being more and more the stakeholders are understanding right now. So, and what we see from a legal point of view that more and more just trying to implement data exchange clauses into the contract. So even without a data model like a digital twin or something, it's really important to exchange the data at all, which is available. For example, certification data. If you involve an auditor to get a green building certificate, they're preparing the criteria relevant for and the application documents for the certification process. But usually they keep it to themselves and don't hand that over to the property owner or the asset manager. And so something that's very important, that this kind of data is being exchanged. Or as I just said before, if you want to refurbish or reuse the building, it's really important to know what materials have been used and what construction methods have been applied.
No, thank you. We've got around a minute left, so I just wanted to pick up with Uwe and Lars as the kind of investors on the panel, and just ask a very quick question. So kind of 20, 30 seconds each, which is let's start with you, Lars. Just on the you mentioned there about these kinds of disruptions can also bring opportunities. Also, maybe in this focus on ESG. So where do you see the opportunities from this in terms of looking at that winning cities side and related to ESG?
If you structure the right products that, so to say, reflect and I'm not only talking about investors, I'm also talking about the larger society, the government, etc. Then I think you will have success. And city quarters is definitely one. And this in combining with the comprehensive ESG strategy. So about technical measurement, about your CO2 emission, etc. But again, I'm kind. This is not just done like boom. It takes time. But that's definitely a chance on the product side, and that you can then adopt in many cities. I wouldn't exclude also the B and C cities, because the A cities are rather packed. So now it's a question: do we have product innovation that serves and also heals our problem that we have with too few living spaces and working places, also in the B and C cities, that people want to go there.
Great, thank you. Uwe.
I think the big opportunity and the big shift we will see is now also in the way how organizations work. So the culture has changed. I mean, COVID has really increased that pushed us 5 years ahead in the way how we work. So the home office element will not disappear. And with that opens up opportunities to the working models. So whether people are 1 day in the home office, 4 days in the office, or whether it's 3, 2, or even more. I mean, that's of course a thing which then also has the impact on these cities, because people can live somewhere else, maybe more affordable, more higher quality of living. And on the other hand, the quality of the office space needs to change, because why are people commuting to the office? It's really about experience, it's about communication, it's about creativity. So, and the office space needs to serve that. So there certainly something has to change, because still the majority of the office space probably is still the dull and boring kind of office space which we know from the last 20 years. So to change into the modern concept, I think that's a good thing for the employees, for the well-being, and at the end also it has the impact on ESG, because people commute less to the office and therefore reduce CO2 emissions.
Great, thanks very much. Really interesting panel. Thank you, Lars. Thank you, Uwe. Thank you, Christiana.